Welcome to the sixth video in the series of Elliott Wave video course. So let's get started. We left the last video completing this channel. We draw this trend line, and then we take the parallel and place it on the top of wave 1 and to find the target for wave C or 3. So if it hits here and then reverse, it doesn't go up, then most likely 90% of the time it is wave C of a correction followed by an impulse wave to the downside. But if it goes and beyond this upper TL and break it and then go above it, then or maybe and the levels of 127 or like 161, it is wave 3. That's impulse wave followed by wave 4, and then again one more wave for wave 5, just like this diagram that we have 5 waves like this. 1, 2, this wave 3 is 1.618, and then followed by wave 4, and then one more wave 5. So how do we measure that and calculate that? So we place this Fibonacci expansion tool, and then we see that this is coming 161%, right? So this could be wave 1, 2, 3, 4, and 5, finishing wave 3, followed by wave 4. Now, for target of wave 4, we're going to remove this so that the chart is clean, right? And we already know that this is 61%, so the hell with that. So now wave 3 and now wave 4 target. How do we do it? We recreate the channel by doing what? We remove this channel, the current channel. Then we draw the TL between the top of wave 1 at the end of wave 1 and the end of wave 3. Okay, like this. And then we do the same thing. We take the parallel line, and then how do we do that? We press and hold a control button on your left hand and click and hold and drag away from the line, like click and drag away. Then you have a parallel line, and then you place that at the end of wave 2, or same thing at the beginning of wave 3, right? So you create a channel. Now you see that we close the market. How? This is how it is, right? Now, can this be a wave 4? That's the question. Then the answer is that yes and no, both, right? Market can do whatever it wants to do. But wave 4 usually should come in 3 waves, like this one, A, B, C, and the side wave most of the time, right? But in this case, for example, it may go up here and then may drop again one more time, like this. Here. And then what if it makes a turn again here? Can it do that? Of course, it can. Or it can make a flat, like go all the way to wave 3, and then from there come down one more time for wave 4 to this low here and outside the TL. That can happen. Yes, that can happen. Now, we've got to go back to the diagram and see what happens or what can happen. So wave 1 and 2, we saw that this is how it is, wave 1, 2, and then we create the channel, and we saw that the price went above the upper TL, broke it, and it went above to 1.618 target, which is this diagram is showing, right? So this is Elliott wave 3. You see the wave 3 usually breaks the channel's upper TL and goes for FE 1.618 of wave 1, right? And now we need to make a new channel to find the target for wave 4. So now 1, 2, and then wave 3 like this. It goes up there, and hit the channel, then drop, right? And that's exactly what happened. You know, it hit the channel here and then drop a little bit and then goes up. Well, that was a previous, right? Previous channel, it hit the channel here, then drop, then went above the channel, and then again one more time. So exactly the same thing. And then if it is 1.618 or even 127, but usually 90% of the time you will see it is 1.618, right? So it is confirmed wave 3. Now for wave 4, what we do, we need to do this, like I just did. 1, 2, 3, 4, right? These diagrams, by the way, these are made like 10 years ago. So this is not made yesterday, right? But this is the current chart. So you see how beautiful it is working. Exactly the chart tells you, right? This is what it is. This is how it unfolds. This is what you're going to find if you look for, if you understand, and if you learn, you look for that, and you look for, maybe you look 10 instrument, and you will find in maybe 3 or 4, definitely, right? And that should be enough for the week. Even 1 is good for the week. If you catch 1 wave 3, that will last more than a week, again and again and again and again. It takes time. See this white line, a white dotted line is 1 day. So look how many days, maybe a couple of weeks before it went from here to here. So if you understand that, okay, this is wave 3 going on, then that's it. You have good trades coming in for a couple of weeks, easy. So now, for this, I'm going to open another diagram. Not another diagram, but I'll show you this is right there, but a little bit further, that this is how the wave 4. Now, you see right now, wave 3 and A, B, C correction, wave 4, but we have in a straight line, right? Here. Then it can go to the upside. This could be A, then we go up for B, then can come down for C. That can happen. This is called sideways correction or a flat correction. We will learn about the flat later on, but I'll just give you a hint that this can happen, and this looks like this. So you wave 1, A, B, C correction, but notice that this correction is the B is very small compared to A and C, and it's a steep drop. But this one is like A equal B equal C sideways. It's not steep drop. B here is very small, but B here is as big as A, and C is as big as A and B. This is called sideways flat. Wave 4 equal to flat correction, where A equal B equal C. That can happen, yes. So we can expect that here, right? But even for that, let's say if we find that it start to rise from here, can we make the entry? Yeah, because it may not do that, and it may go straight to the upside, just like here. That, see, right now the situation is this: it hit the channel tier and sitting there, right? But the next move, it could be like this. It can drop and break the channel TL a little bit more to the downside. And I think that I explained in my 4th video something, that when you create the channel and you have a TL, then usually the price comes down and goes for the outer TL, whatever it is. If it's a regular TL or the channel TL, whichever comes outside, whichever laying down outside, price will go there and then will come inside again. So this one here might go up and then drop, and then or go up here all the way and then create a flat. And then even a triangle can happen here. So what is the triangle? We're going to talk about that later. But this is going to be a complicated, sometimes not, but sometimes can be, most of the time, 80% of the time, the wave 4 is very, very complicated, right? But this is how it is. You find the wave 4 target. This is the ideal area. This is the ideal situation to find the target. Maybe a little bit more here, but it will wobble around here and then start to go up for wave 5. And it will be in this fashion. It will go inside, find support on the TL, and then start to rise. Okay. And at that point, what we need to do is that we need to, if it start to go, if this wave is finished here, when the week start next week, right? Today is Friday night is gone, right? It's 12 a.m. Saturday starting. So then Sunday evening, the market will open, and then it can drop, it can go up and then drop and do a lot of things. So we're going to see what happened, right? But once you understand that wave 4 is finished, some kind of sign that wave 4 is finished, and then right now, can we say the wave 4 is finished? No. But what can we do is if this thing start to bounce from here, such as a channel TL, yeah, right? And then, for example, my setup is that when red candle turn blue, and if I find my entry in the pair, like this is the index chart, right? So we don't trade this, but we get hint from it. If I get a reversal candle here, then I'm going to be looking for long entries in all the yen pairs. And if I find one, I'll take it, hoping that it will go up. So even if it goes up until here, I'll probably make 50, 60 pip in each and every pair. Or maybe if I make like 3 entries in 3 different pairs, 50 pip each, 40 pip each, that's 150 pip, 200 pip right there. Even if after that it drops, I'll be okay with that, right? But it may be like some kind of news comes in and then it start to go up and then continue to the upside in a straight line. That can happen, yeah, that can happen also, right? But the idea is that if we are from here, it has become bullish and we are in uptrend, so you only go long. As long as you are in an uptrend, you only go long. So if it is dropping, leave it alone. If it is going to start to go up, get in, hoping that it will go all the way. And if not, what happened is that my system is like, when I open the trade from the 20-minute chart, my SL is 25 pip, fixed 25 pip all the time, fixed SL in the beginning. Now, if the price goes up a little bit more, like say if I open the trade here, it goes up a little bit more, 20, 25 pip positive, I move my SL to break even. If it comes down and take my SL out, I don't lose anything. But if it goes, go to the upside, yes, then I'll make, right? That's how most of my trades are. Now, if I show you my trades, for example, quickly we will go and take a look at my trades. Then you will see that, between the entry, for example, starting from here, right? Look, if this is the chart, right? So this is my setup. Yellow line has to be above the black, and this all the way down, and then coming to the upside. So now you see this red candle. As soon as I have 1 or 2 blue candle to the upside, I open the trade right there. You see the arrow is right there. And after that, you see that the price never came down. My SL, from this, this is a gold chart, by the way, right? So it's the fixed SL. Right below this low is my SL. And price never looked back. This is the entry as well. This is the entry as well. And you see that. Now, the next, you'll see the same thing here, right there. Red candle is coming in, and this dropping, and all of a sudden it start to go up. Red candle turn into a reversal candle and 1 blue candle, and I open the trade and see. After that, this was a 15 pip SL here. 15 pip. It's a 7-minute chart. So 15 pip SL, as it is nothing, right? But price never went down. This is the beauty about this setup, that after the retracement, when the continuation start, I get in. That's the idea. With this right here, this is also an entry. You look, price never came back. This is the entry. Look, price never came back. Never hit the SL. All this, you can see this one here, pound yen 7 minutes, beautiful entry here. I open the trade here, place the SL here. It goes up, up, up. When it's here, I come and sit on a break even. Never look back. Price just went straight up, right? This is how it is. Look at this entry here. This entry, it didn't go much higher, so I didn't move my SL until it goes here. Then I move my SL, and after that, it never came back. It wobbled, but this low at the time of the opening the trade was never hit. This low was always intact. My SL here was intact, and it was up and up and up and up and gone for 75 pips. This eur-usd. All the trades. I have 21 trades last week just using this system, right? Obviously, what I'm not showing here is that, what kind of analysis I did in a harmonic pattern or Elliott wave, what wave I'm in, and this and that. Based on that, of course, you're learning, that's what you're learning, that, based on that, if you know that you are going up in wave 3, then you get in like this and you hold on to it. Simple as that. A lot of people who doesn't know what wave they are in, and if they are in 30, 40 pip in profit, they're scared of losing that, and they close the trade, only to find out that the pair goes 100 pip more to the other side. But if you understand that which wave, like especially wave 3, it's more than 100 pip, 100 pip, 150 pip, 200 pip. And if you are getting in the right place and you know the daily range of that pair, that this pair has daily range almost like 140 pip, means in one day this pair moves around 140 pip. So if you make an entry early in the day and only 30 pips are gone, so from 140, 150 pip daily range, you still have a shot at 100, 110 pip trade. Why would you want to close here? Just hold on to it. It will go and finish up the daily range all the way, or sometimes even higher. So like the other day, I had a USD yen, 170 pip. Daily range is not that much. Daily range is probably 100, 110. But it went all the way because the pressure was too much. That happens all the time. So you see that this is how it is. So this is what it is. Now this one you can play here if you want, but me, if I find out that I'm in the wave 4, most of the time I'm staying out. But unless I'm very confident, I do it. But my recommendation is that do not touch wave 4. It is very complicated. A lot of people lose money right there in wave 4. But anyway, so it's probably gonna be straight. It's finish, or maybe it will go up. A, B. This is A. This is B. This is C, and then it will go up, or it will go A, B, C, D, E. Right? A, B, C, D, E, and then it will go up. Now that E up until E, that's called a triangle. And triangles are even 5 different kind of triangle. So you need to understand which kind, right? And these flat, they are like 4 different kind of flat. We will talk about that in separate video, one by one, right? You need to know that. My recommendation is to stay away from this completely, but at least know what the heck is it. Because in the future, like me, you will be able to trade it. You will be able to, pinpoint the wave 4, what is happening in there, and nail it, to be honest with you, right? It's not that hard. It's just a matter of learning, which you are doing right now. So maybe a year, 2 years, you will be able to easily understand and trade wave 4 as well, just like me. I don't let it go now. Most of the time I get it. If I see the setup, I'll get it. Because from wave 4, you get wave 5. So trade wave 5 is good. We just start in wave 4, right? So yeah. So this is how now what do we do is, let's say this is what it is, or maybe this wave 4 end here, right? Then we create another channel. We're gonna remove this channel, and we're gonna create another channel for wave 5 target, and that would be the end of wave at the end of wave 2 and at the end of wave 4, right? Connect that. Sorry, I was thinking something else. All right, so when you connect the TL, these 2 points, wave at the end of wave 2 or the beginning of wave 3, right? That and the end of wave 4, and take the parallel line and place it on the top of end of wave 3, like this. And then expect that this thing is gonna go and hit. We can expect, but most of the time it don't go there, right? But that's how you draw the channel. It will go. Most of the time you will find that the extension level we talk about, in the fifth video, 127, 127 to 161, it usually end up at 127 of this wave 3 to wave 4 drop. So it will be ending somewhere here. Yeah, if it goes to 1.618, it might hit the TL. This is what way up there, right? But a lot of times it will stop at 127 because the momentum is dying out, because everybody knows that this wave 1, 2, 3, 4, 5 is about to finish. So everybody start closing their trade, right? So we start to experience low momentum to the upside. So this price is just dragging, and somewhere here makes the turn, right? So this is what happened. Right now, it is happening in a yen index 20-minute chart. You see how step by step I showed you. Now, let me show you another example. It's just a reverse example on the something to the downside. Very quickly, I'll show this wave 4 and wave 5 in that US dollar index 40-minute chart. Let's see this. This is a big move, right? And then all of a sudden, you see this. When you see this, you will see that, okay, this could be, if the price is not going up there, higher than that, and it looks like this is a nice big move to the downside. So maybe the tides are turning, right, to the downside. And then this high, and then this low, and then this high. So you start measuring things, you measure every single move, by the way, right? So you see that you will notice that, okay, we hit this 61% here, and then we drop here, not going lower low. So this is point C. This is, we're talking about harmonic pattern and Elliott wave. So like this is wave 1, then A, B, C correction is 78%, which is also in harmonic pattern. This is a perfect Gertley pattern. We will, if you take that course as well, you will learn about that. So specific calculation for this pattern. So, but in Elliott wave perspective, this is wave 1 and wave 2. Simple as that. And wave 1, A, B, C, wave 2, right? Or this could be wave A, wave B, and then followed by one more A, B, C coming down, or 1, 2, 3, 4, 5 coming down, whatever, right? So when you see this already in place, and you see this, that means it's clear that this is 1, 2, and 3 starting, or A, B, C starting. C also have 5 waves, 3 also have 5 waves. So this could be wave 1 and 2 out of that. So we leave this alone and we start to measure this, right? So we measure this first, that how much is this drop and how much is this rise against it? What is the retracement level? You notice that it is in between 61 and 78%, reversal zone, beautiful reversal zone, and it starts to drop. Then immediately you see that, okay, that's what's happening. Let's make a channel here, okay? So we draw this, and then this is the end of wave 1, parallel line at the end of wave 1, and the price came close, bounced, hit, broke the TL, bounced, and then completely broke and went outside, right here, right? So now we know that it's not C, it's wave 3. And we want to see if it is 127 or 161. So we will use this tool here. And then we see that from the top to this, and starting wave 3 from here. So how much is this? 161, right? So 161 is the calculation for wave 3. We already saw that. We saw wave 3 right there. So wave 3, we understand that. Wave 3 is 1.618 of wave 1. Using this tool, we measure that, and we find out that this is wave 1, wave 3 starting from here, and it is 161% touch here.